One. Hello, everyone, and welcome to another edition of the Forex Technical Market Update for July 21st, 2015. Okay, we have this morning the euro bouncing off of that area of support near that 108 level that we spoke about yesterday. The market is up pretty strongly today, and taking a look at the 50-minute chart, we are above the daily R2, and we traded above the swing high near this 108.70 level in the euro, and also the swing high near 109.06. So this is a euro that is bouncing strongly from this area of support. And I mentioned yesterday that this 108 area is also the 618 retracement level from the move at 104.60 to the high of 114.66. And that combined with the swing low, this area of the previous low right here, provided evidence, and we saw that the market actually bounced from this level. Now, where's the market going from here? So the bulls clearly think that this is a good area to buy the euro, and they are winning the battle at the moment. But we have to see, for this market to turn more bullish, we have to see a close above 112. Until the market closes above 112, then the bears, I think, will remain in control of the market. A close above 112 would open up the high of 114 and 115. The actual high is 114.66. Let me just draw a line here. Okay, so we could see a test of this 114.66, and that will make the market more bullish. Keep in mind that also we did break out of this consolidation pattern in the market recently, and sometimes when you break out of consolidation, you do get bounces on the way down. Now, a close below 108 will be very bearish and will open up the previous low of 104.59 for a test on the euro. Taking a look at the dollar index, we see that the market did close above the swing high. Market closed above the swing high near this 98 level on the US dollar index, which was fairly bullish for the US dollar index, but we're getting a slight retracement here. So the dollar index chart actually looks a bit more promising than the chart of the euro. A close below the swing low of 95.45 would pressure the low in the dollar index of 93. So we have to keep that in mind. Okay, moving on to the British pound. The euro is up on the day, but the British pound is actually down on the day, which is quite unusual because the pound normally outperforms the euro. But the British pound is down on the day, and there's a minor trend line here that is currently in play. And the market, you could see the market come back down to this trend line, before heading upwards. Resistance clearly is at the high of 156.76. And let me just go on the 4-hour chart so you can see that more clearly. The swing high at 156.76. Taking a look at the weekly pivot point, keep in mind that we are close to the weekly S1 is at 154.76. That is some 70 odd pips below this level. but we could see the market go down to this level and then head back upwards. So just keep that level in mind, the 154.76, because these pivot points can be very powerful, especially when the market is in an uptrend. Okay, taking a look at the Canadian dollar. I have received a number of questions about the Canadian dollar, and I did speak about this situation in a market update last week, where I said that the Canadian dollar is approaching a swing high that was made in 2009. And let me just look out, and this is a monthly chart of the Canadian dollar. And as you can see, in 2008, late 2008, this market challenged this 130 level once, here, twice, 3 times, and then in 2009 the market came back up again, and each time we see that the market failed at that level and came back down until really this declining into 95 level. And what we are seeing is that the market is currently approaching this 130 level once again in the USD Canadian dollar. So I would be looking to see how the market reacts to this level. And let me just draw the line. This is very strong resistance on this chart, and being very strong resistance, that does not mean the market cannot go above it. But what it means is that in the past the market has failed at this level a number of times. So this is definitely something to look out, and a chart we will keep on our watch list, because it's not very often we get this markets approaching these very strong resistance points, and currencies tend to respect these levels. And if the market does break above it, that would be very bearish for the US dollar. Now, what we're looking for, this is a monthly chart, we're looking for a monthly close above this 130 level, because as you can see, when the market traded up, it traded up and collapsed, and we have very long candlestick wicks here. So this market has touched these levels a number of times, but has never closed above it. So that's what we're looking for in USD Canadian dollar. Okay, looking at Australian dollar, let's go back to the daily chart. Australian dollar up on the morning, fairly bullish. We do have a recovery in gold, which is also helping the Australian dollar. And but there's support down by the low of 73.28, and I expect resistance to be up this trend line here. The market could go up more, but we should, as it approaches 74.80, 75 region, we could see some pretty strong resistance in the Australian dollar. Okay, turn into the Japanese yen. The market did trade up to resistance in the 124 region. It's seen clearer on the 4-hour chart. Market has traded up to the resistance and is currently failing at this level. Which and this happens quite a lot when a market hits a resistance point. It will go up and back off before attempting to go up again. So we just have to see if the market declines past 123.50 and 123. That will signal to me that this market could turn around and pressure the 120.50 low in the Japanese yen. Keep in mind that if you look on this chart, we had a breakout of this region, and I was going over this with someone yesterday, where we see a trend line, and the market broke out and retested the trend line. And this was an example of where resistance can become support. And the market was in a downtrend. It broke this trend line, came back, tested the trend line before going up again. So that was just something we were going over yesterday. And just to illustrate that these resistance and support points, once broken, can now become future resistance or support. Okay, if you would like to have these trading signals sent to your account automatically, you can click on the link below this video to get started. And let me just address this. A common question I get is, are these signals emailed out? And the problem with emailing the premium signals, will always have these free videos going out, but the premium signals, when we email them out, what we find is that a lot of traders miss the emails, or they may not take the trade, or for whatever reason they are unable to execute the trade. And when you are trading a complete trading system, you have to take all the trades that the system generates, and we're not picking and choosing. So that's why we send the signals directly to your account, so there's no possibility of missing anything. And the maximum risk per trade is 3% on the account. So we're not risking large amounts on the account. Okay, if you would like more information, click on the link below, and thank you very much for listening.